of men are so rebellious that a person can come back from death and testify of hell, and they still wouldn't repent. Why? Because you love sin, and you never hear preaching like this, because we only want to fill you up with secular humanistic doctrine. And this ain't me being a hellfire and brimstone preacher. This is me reading to you the words of the one you call Lord and Savior, who is warning his church. Deal aggressively with your sin. Stop playing with sin. Stop keeping it in the closet. Stop treating it like a pet. You see it, you acknowledge it, kill it. Keep wringing it out. Run from it. Throw yourself on the altar of God and say, Lord, have mercy on me. This is
Yeah, good morning, everybody. We got a lot to discuss today, that's for sure. So just to set the stage real quick. So we're going to do our normal weekly prep. It has to do with all this stuff right here. So this is what you can expect. Any of you guys that are new potentially that watch this replay or join later and then rewind, you want to take a screenshot of this paper. This is literally all you have to do, right? Every Sunday you got to determine these things, and then I show you guys the process in action. So you have a set process. Spending one call here, you have a whole set process on how to break down basically Sunday to prepare for the week. Okay, so those of you that have been here for a while, you guys know what we're going to end up getting into with that. But specifically, what I want to kind of dig into, some of the topics that I want to kind of break down. It's going to kind of also depend on what you guys recommend, because I'm not sure where all of you guys are at. So if you can help me with that, let me know in the chat. Out of all these topics here, so 1, 2, 3, 4, 5, 6, 7, 8, 9. Out of these 10 topics here, which ones would you say are your weak points? Can you guys let me know in the chat? Looking at this stuff here, right? Tell me which one out of all of them, or if there's multiple, you can mention the multiple as well. But if there's any, one or two in particular that you guys struggle with, what would be the biggest pain point, the biggest struggle point? Right, just let me know in the chat. Okay, let me see. Tony said risk management. Okay. Tony, I actually posted a, a community post. I spent a couple hours creating these two community posts where I talked about actionable things and perspective shifting, I guess, comments, right? It's like a big essay kind of about overtrading and risk management, kind of describing what it is that I do as a risk manager, as a trader, and how I was able to then shift my perspective, right? Some of the perspectives I shared in that community post. Let me actually pull it up real quick, actually. Let me minimize that real quick. I'll keep this here because, again, any of you guys that have problems with this stuff, just let me know. Because that'll kind of guide where we're going to take this outside of the Sunday call. Of course, we're going to get to the chart, right? We're here for 2 hours generally on these calls. So be patient, right? Because you're not the only one. Okay. So, but yeah, I made these posts for a reason. I encourage all of you guys that do watch this replay to go ahead and go look at this. It's a very deep dive on the risk control and process and mindset that I have. Obviously, it's from over 6.5 years. It's almost 7 years here in August. And then I also have the overtrading shift perspective. Okay. Uh, People overtrade. Everybody knows that it's a problem. Everybody knows that this shouldn't be taking place. But, something has to be done about the perspective you hold when it comes to these concepts, right? When it comes to these issues, right? The overtrading, risk management, it's literally life and death. If, the trading aspect was a life, if you break these things, if you don't have these two things in alignment, or over trading, over leveraging, and just pure risk management, nothing you do from or learn from anybody will work. A good system, a profitable system, a historically amazing system will still fail in the hands of someone that has the wrong perspective, that doesn't have discipline. So in reality, if you want to be a trader, it's life and death for you to understand this. That's why I spent around 4 hours creating both of these, right? I wanted to make sure that I included everything that I could possibly think of that I've been taught, perspectives that help me kind of shift the way I view things, and then actionable steps that I not only teach my private group, but things that I've learned over time and was taught by a couple of other mentors that I have, including ICT, obviously. But many people overlook this, and it's unfortunate. It really is, because these things are very, very, very significant. People overlook the fact that this is so important. That's what I mean. Not this post in general, but I do think that this should help you. I spent a lot of time on it, so if you have time, I encourage you to look at it, read through it, all of it. If you don't have a lot of time to look at both, because it's a lot, right? It's a lot. I spent a lot of time trying to dig into this, looked over my notes, looked over my yearly journals from the last 6 years, just to make sure that I covered every basis that I possibly could to give you the most value, and give you solutions, because the number one and number two things that I get hit up about all the time, every single week, sometimes on a daily basis, is how do I stop over trading and how do I manage my risk properly? I literally gave you the whole entire blueprint in these 2 or 3 posts, right? And I do it every week, right? We talk about this stuff every week. So again, I encourage you to do that today if you guys have some time, and let me know your thoughts, right? Let me know your thoughts on some of the things that I describe in the process, right? And let me know if you're going to try to make these adjustments, because if you don't change anything, nothing's going to change. And if you keep over trading and over leveraging, I'm telling you right now, you're going to fail. You will absolutely listen to me. You will 100% absolutely fail at trading if you do not stop over trading and managing risk like a lunatic. Okay? It's undeniable. Everybody that's profitable can tell you this. They will tell you this. They do tell you this. But for some reason, it flies in through one ear, out the other, and is disregarded. And it's like, what's the pattern? Tell me when to buy and sell. That's the thing. I can tell you when to buy and sell. But because you're not managing risk properly, or you'll take more than 1 or 2 trades that are given out, you'll fail. And then you'll see the mentor be profitable, or something will work out in their favor. But then you sit there wondering why. Why am I not being able to copy this and succeed? I'm copying the person. Well, that person you're copying probably took 1 to 2 trades. While you, on the other hand, not you guys in particular, but the trader that's following the signal will have taken like 5 trades, or entered late, or entered early, or didn't take profit, or whatever, right? Whatever the case may be. Maybe they over leveraged, right? And the mentor that's calling out the signal didn't over leverage, so it doesn't matter. But the student that did take the signal is over leveraged, put like 5 entries or whatever, and they blew their account. And then the mentor gets blamed for that, when in reality, it should come back to you. And these two things, over trading and managing your risk properly, I'm telling you one more time, if you do not stop doing these things, no matter how you think, whatever you think about it in the moment, like, oh, maybe I entered early, I can get it back. Or I took a loss, I don't like this feeling, I know I can get it back. Any of these things that make you break these rules, for one, it's going to damage your account long term. And then for two, your mind, you're not allowing yourself to trust yourself at all. Okay? You're making it so next time something happens, when you take a loss or when you even sit down at the chart and look at the moving candlesticks, you're not going to be able to trust yourself. Your subconscious mind will remember, oh, I remember that I got hurt. I broke the rules. And you may not say, oh, do I trust myself? I don't know if I trust myself. But your internal mind, your subconscious mind, that inner programming from experience is screaming to you, be careful, be careful. And your brain's trying to protect you. So then you'll miss, you won't take the trades, and it's just a shit show, right? So again, one last time, burn this into your mind. If you do not get a grip of over trading, over leveraging, and risk management, if you don't get a grip on these things, it's a guarantee, I don't care who you are, that you will fail. Okay? And some people have experience, right? They have a lot of experience. They, their system allocates for a little bit more trades here and there. But at first, until you're getting to that point, until you see profitability and consistency in your process, consistency week to week, month to month, year to year, you need to get this stuff in order, right? Again, I'm not aiming at any of you guys that are on the call. I'm just saying in general, these are things that I get hit up about so often. And it's unfortunate because I was there too, and it took a mentor doing exactly what I'm doing here and like holding me accountable for me to really stop. And someone to tell me this, if you keep doing this, you're going to fail. Do you want to fail? Or do you want to succeed? Because you're choosing to fail if you break the rules. And if you take a loss or maybe make a mistake and you feel you have to get it back, so you break your rules. Every time you do that, it pushes it farther and farther away. It makes it more and more impossible to do because you're not going to be able to build confidence if you basically keep lying to yourself, saying, I'm going to follow the rules, but then you don't. You build a plan, say you're going to follow it. It makes so much sense. You're so excited. And then right when the market turns on and you see the price moving, you start breaking the rules. You know what I mean? It's just not worth it. Okay. Again, I've taught over 200 students over the last 4.5 years. And I'm telling you right now, the number one thing that causes issues is overtrading and not managing risk properly. And the solutions that I've developed over time and things that I tell students about and how I get them to fix these problems is literally laid out for you in a writing format so you can save it and put it in your journals. So you can go and review it, right? You can constantly remind yourself. Because again, without this, without these protocols, it doesn't have to be exactly the same, but the ideas here are sound. And they connect with, pretty much every other trader that is actually profitable, So you can use this as a baseline or just your entire system, because this is my system. How did I stop myself from overtrading? Because I was a savage. I was crazy. I was just 20 trades in a day because I just couldn't accept it. I didn't know what I was doing. I didn't know that things repeated. I didn't know that I don't have to worry about it. I'll find something tomorrow, right? So I ended up blowing myself out. And I had to be taught these things in order to stop that and, slow the bleeding so I can have the opportunity to make it back. Because when you overtrade and over leverage, you may have the chance, if you don't break the rules, you may have the chance like the next day or maybe even the next week, depending on if you're struggling at that time or not, you'll have the opportunity to make it back. But the deeper and deeper and deeper the hole is that you allow yourself to fall in without any process or any acknowledgement that this is an issue, the harder it is for you to really get back on the train. You know what I mean? So, things that are paper cuts, like one loss, should never destroy you. If it is, you need to lower your risk. If you feel you have to overtrade and over leverage, that thinking is backwards. Okay, because more trading does not mean more opportunity. It means more exposure to risk. Yes, there might be a time when you succeed with it. You may find times when you lose and then you find a setup later on, you can make it back. But you have to be very observant to these things, these circumstances, because if you're just doing it and your emotions are wild all over the place, it's just a matter of time. Even if you got it to work a time before. Maybe you got lucky. Maybe you actually followed the plan you have. But it's more likely that the next time it happens and it fails, when you do break the rules and overtrade, the hole is going to get even bigger. And the hole is not only financial, it's mental as well. Okay, so like I said, go through these things. It's very important stuff. I gave you guys a blueprint for you to copy, right? Put it in your journal. It's a forever resource you could have. I talk about this stuff all the time too live, so it's constantly reinforced. But again, if you do not get these things in order, if you allow this stuff to continue to plague your trading, you will lose and you will fail. And nobody wants to fail. And I don't want you guys to fail. So please take this advice, okay? All right, so with that out of the way, let's actually come back over to this. So again, we're going to go through the whole process here. Let me know, like I said earlier, I know a couple of people, a couple more people have jumped on. So at the start of the call, I mentioned these are topics that I'm going to want to really nail down on. Depending on which topics you guys are the weakest at, depending on, what is the most common here out of these 10 subjects here. When we're done with the Sunday prep call, where we go through all the assets and whatnot and determine what next week is going to do, I will then try to pick up on some of these things. So just let me know in the chat, right? You don't have to let me know right now, right? We're going to get started. But let me know in the chat, throughout the call, which one of these things you guys struggle with the most. Because every single one of these things is talked about every single day, right? Here in this community, every week for you guys here on YouTube. But all this stuff is being actively applied constantly on the back end. I may not talk about every subject, but I'm considering all this stuff. I have a process for each one of these things, and it creates a system that you guys see me employ. Okay, so just let me know, because these are pillars. Okay, I can tell you that if you have a process and a pretty deep depth of understanding of these concepts here, you really don't need much more. All you need to do is continue to refine, because these concepts here, this little list, if you guys understand them, you have an answer to almost every question, from risk management to targeting to when do I find a setup? Where is a setup? The only thing that's not mentioned here is time. Well, live trade management, I guess you could say, involves time. Okay, but time is essential, obviously, right? So yeah, let me know. Think about it. Think about your experience and whatnot, and let me know throughout the call. Let me see. Tony said I'm right 85% of the time. If I just stop and take my time, I will be profitable. Yeah, dude, Tony, I'm telling you. That right there is a testament to what I just said, right? Because most traders that come to me too, this is another thing I've noticed over 200 students that I've built a relationship with. Some more than others, but the commonality is they come to me knowing what to do, or at least having a basic understanding of what to do. They understand the topics that are significant, but the main commonality is they overtrade. They cannot stop after one or two trades. Here, let me actually pull up the thing that I mentioned, the post. Okay. Where was it? So there's a section in here where I talk about I think it was in this one. Yeah, it's the overtrading. Where did I put it? Okay, right here. Very important right here. Okay. Trade one is generally the actual model. You planned everything out. Everything is, rocking and rolling. You know what you're looking for. You're trying to wait for this or wait for that. The first move is well planned, right? So you engage that. If you take a win, great. If you take a loss, you lost following your plan. So it's not necessarily a win. Monetarily, it might be, but process-wise, plan-wise, professional trader-wise, there's nothing wrong with it. It's just a paper cut. You'll be all right. and maybe you entered early on accident. Well, there's a secondary bullet that you have. You could take that second trade and it might still be valid, right? It might still be in line with things. Maybe you just got wicked out real quick, but overall, structurally, everything has been intact. Well, if you take a loss on that second trade, very interesting thing happens. Trade 3, you might be waiting for, you might be bored, thinking, oh, I want to make it back. Like all the emotions start to trigger after that second trade. And once you get beyond that, you start getting frustrated. You might be chopped up in consolidation. You might not be wanting to admit that. You might be having something going on in your life that makes you feel like, well, I just want to end it, break even, or, at least get something because I feel like shit right now. And the market has to make me feel better. There's a like massive amount of things that go through a trader's head. But again, after that second trade, your overall quality of your decision making is declining already. After that second trade, after that first one, the next setups are going to be, at least for a new trader, the quality of your setup is going to be declining pretty rapidly, pretty aggressively. And of course, the traders that are more well versed and whatnot, it's a little bit less of an impact. But this is just a fact. You're trying to overall control not only the amount of trades you take and your exposure, but the quality of your decision making. Because whether you want to believe it or not, when you sit yourself into high stress environments, your decision making gets depleted over time because people start being irrational, they get reckless, and it's a problem, right? And in trading, a lot of us try to push that to the side and think that that's not a true statement. Try to in the moment think, oh well, I just want to make it back. I don't care about any of this stuff. I just want to get it back, right? And it just pulls you into the wrong ways of thinking, and then you get played. And that's what the market is built to do. It's built to make you fall into a spiral of chaos. So you have to deny the market's ability to do those types of things to you by putting limits on yourself. And again, people don't like to hear that. They want to be fed this drug addicted type of mindset where they need to take a trade every 5 minutes. And if you're a mentor or whatever, you need to be giving it to them. Otherwise, they think negatively about it. Well, it's just like a drug dealer, right? People that just give signals and promote that stuff. When in reality, if they're a good mentor, if they're worth listening to at all, they should be highlighting this stuff. And it doesn't get a lot of attention, but it really should because it protects you, right? Having the right mindset and getting good advice, it protects you from blowing up. And you don't want to blow up. If we're trading, we obviously want to make this impactful to our lives. And if you're listening to shitty advice because someone's trying to build a following on social media and feed you dopamine like a drug dealer by sending you signals nonstop, then, you're putting yourself in a bad situation. You're putting your future in someone's hands that doesn't really care. And if they're not talking like this, they don't care. Okay? Because they know damn well in their trading, they face this stuff. They have to have these conversations with themselves. They have to face these realities in their own world, in their own life. Yet a lot of these people don't talk about this because, they treat their students like drug addicts, and they're just trying to give them a fix so they pay them. And it's unfortunate, it really is. And that's not a knock against all mentors that have services and whatnot. If they're worth listening to, if they give good advice, they're worth the investment because they put the time in. They're willing to give you their time. And if they have something worthwhile and they can prove it, there's nothing wrong with them. But most mentors in the industry, that can't be said about them, And I'm sure you could see who they are. People that are really flamboyant most of the time. Some of the flamboyant people deserve to be flamboyant, right? I could list a few that I know and do respect, but for the most part, it's not the reality. Most of these people are frauds. They can't even do what we do on a weekly basis. Like they can't even tell you where price is going to go. They're just guessing every minute. So again, I want you guys to really look into this, but I just wanted to point that out. But yeah, thank you guys for being patient. We will get into the charts now. So do you guys have any questions before we get started? Let me know in the chat. Oh, whoops. So yeah, we got a lot of stuff to talk about, so definitely stick around to the end. Don't forget to like the video, subscribe to the channel if you guys get value from the content. It helps the channel a lot. It pushes us out to more people that need to hear this type of stuff, because a lot of people, they're reluctant to hear this stuff, but they need to hear it. Maybe it's going to be a sign that, helps them at some point, right? Maybe it's a reminder that's much needed for someone that is on a spiral of over trading and over leveraging and just blows their account. And they just need someone there to give them the truth. When you guys like the video and subscribe to the channel and tell people about this channel and what we do here, because my intention's pure to help you. I'm sure that it'll help a lot of people. I know it's helped a lot of people so far. Students that come and spend time here, they get a lot of value. They see good results. So I think that getting in front of people is worthwhile because we have something to say and it's worth listening to. Right? So yeah, let me know if you guys have any questions. If you don't have questions, throw a 1 in the chat just so I know where everyone's at. Morning, Zach. Appreciate you hopping on, bro. Appreciate the support too. You've been really supporting the channel lately and what I do. George, welcome, my brother. All right, George, everything's good. Okay. All right. So with that being said, let's get into the bonds and yields analysis. So we're going to start with the bonds here. You guys know that what we teach here on this channel and in my private group about intermarket relationships, the bonds and yields have a heavy impact on the market, right? The things that we trade, at least. The bond market is generally positively influencing the foreign currencies like GU and EU and reverse correlated to the dollar, while the yields here, right? Here's the symbols for those of you that may not know what they are. These are the exact ones that I use. There's 3 of each. Why is there 3? Some people ask me sometimes. Well, there's 3 of them because all 3 of them are related to one another. They're just different time intervals, like 5, 10, 30 year. And a lot of times when you have this trio, you can also find SMT that can then kind of help you predict where price is going to go in the future, not only for these assets, but also for something that's loading up in the assets that they affect, right? So like if you have like a bullish SMT here on the yields, but the dollar's going lower, right? And then you see the yields rally off that bullish SMT. Well, if you see a bullish PD array in the dollar, maybe it's going into a bullish seasonal tendency, and then you get a change in state of delivery bullish on the dollar, while this had a bullish SMT and started rallying. You're able to predict kind of the fact that it's going to go higher at some point, right, in the near future, and vice versa for shorts, right? If you have like a bearish SMT and dollar's been going higher, but then you see the yields break down off that bearish SMT, then the dollar hits maybe a bearish PD array, and then starts to decline. It helps you predict what's possibly going to happen and whether something should hold in terms of a PD array. Okay. So that's why there's 3 of them, and that's why it's significant. A lot of people are lazy, so they don't want to look at this stuff, and that's fine, right? It's maybe not going to make or break you, but it'll definitely increase your chances of consistency. Okay. So that's why I have these 3. And again, that's the symbols. We'll put that away. So like I said, going into the bond market, we see that this had a huge decline. Ironically, like I just described, when this drops aggressively like that, it has an impact on the foreign currencies, which is even more exaggerated and in line. Right, it has a positive correlation. So this decline in here that happened with the bonds, you see the effect here. And I did think about this. Okay, let's take a rewind, right? Like insert the rewind sound. Okay. Do you guys remember? I talked about how this is probably accumulation. I said we got to watch this for manipulation, and if it breaks down below this, we expect it to break down for power 3 going lower. We saw that and talked about it last week when we were up here. Well, not last week, 2 weeks ago. I'm sure you guys remember because I made a big deal about it. I highlighted this as accumulation, manipulation, possible distribution. I thought that that was going to be a likely scenario because of what this was doing. It was refusing to want to continue higher. I said that if this holds here on the bonds, it'll push it higher. And then that should pull the indices higher and the currencies higher. But it didn't do that. It broke back down below. It closed below the 50% here, which is another thing we identified. Again, this is not me just in hindsight. I talked about this well in advance. I had this eyeball here well in advance. Just go back and look at the videos, right? But essentially, this thing started to decline, and guess what happened? We were correct about the accumulation, manipulation, distribution. Also, you put that in perspective, but then you merge the fact that seasonal influences are bearish. Sell in May, go away, okay? That is a slogan you got to keep intact, right? Every single year, you got to think about this. If it's sell in May, go away for the currencies and the bond market and the indices, what does that mean for the dollar? Well, the dollar should rally up. Do you guys remember what we talked about with this gap in here? We talked about this gap in here not having efficient buy-side delivery. I said price was going lower, but we may at some point, if things align, we may look to seek this gap up here, right? I also talked about this piece of price delivery here as well. I said it's only sell side, so it's inefficient to the buy side. What have they done? They have now intentionally, off the heels of the bonds going lower and the yields going higher, gave it a reason to get up into this gap up here that I talked about well in advance. Again, watch the replays. We've called this entire situation. We've literally been in front of this anticipating these things, okay? And of course, it was consolidated in here, so we had to wait a little bit. It got above that daily bullish order block, and then it was off to the races. Again, this is not hindsight. We don't just do things in hindsight. It's recorded. We talked about these things and the likelihood and possibility of these things taking place, and it's manifested, right? So again, me saying this right now versus you watching the videos and then also kind of getting the context in the moment, how we were thinking as we were watching this unfold, there's a total different learning experience from watching the result of something that's been explained already versus watching the stuff that happened before, watching us walk it all the way up to this point, then seeing the result. This is why it's super important. Those of you that do see that there's validity here, right? The things that we talk about, you know that they work out, right? Or you start to see that they work out. It's vitally important that you listen to these videos. Okay, because me sharing, concepts and whatnot, that's great and all. And seeing the result and me saying it is great and all. But again, it's proven here. The stuff here works. I try my best to teach you guys everything I know. And you just got to show up and get the value. You don't have to stick around forever. But again, my intention is to help you and get you the tools so you can walk on your own. I don't want anyone tethered to me. I want you to hang out here because you like the vibe, you like the community, and you want to help me on my mission of helping traders. I have a lot of students that are becoming very good now, and it's a beautiful thing to see. Shout out my student Harley, by the way. Those of you that may not know, my student Harley has a YouTube channel. Let me actually do a shameless plug, so you guys go and follow my youngest student. Actually, oh, he's doing face reveals. Oh snap! Uh-oh. Not a full face review. Oh, freaking Harley, dude. Yeah, so make sure you guys go follow him if you haven't already. He's my student for the last, 3 years. He's not so much a student anymore. He's becoming very, very good. He came to me when he had 3 months experience. He's had multiple influences, but he spent time here with this community for years. I spent a lot of time helping him out. So, shout out Harley. Maddie, George in the chat, Mike, you guys know, you guys are part of the private group. You guys know how good Harley's become. and I'm very impressed. And he deserves all the flowers because I just am a conduit, right? I'm here to help get you guys on the right path so you know what to aim at, what to do. Um, and if there's things that align with what you do in the market, you can use it as a weapon. And we can all pull each other up as everyone continues to elevate. So definitely go subscribe to him. I want this to become a lot bigger than it is. He deserves it. He's hardworking, just like Mike, Maddie, and George in the chat. Just like Tony. All of you guys are hardworking, but we're all a little family here. So, I encourage all of you guys to get to know each other, because that's kind of the vibe that I've tried to build in my private group. So I think if we can do that here on the YouTube channel as well, I would really, really like that, because it becomes a group family thing where everyone's doing the right things, encouraging each other, no negativity. Everyone's just continuously building each other up. And there's a saying, right? You can go far on your own, but we can go farther together. And I feel like that is a true statement. And in terms of going farther together, right, it means, in my eyes, that we get to help more people, and really start to, do our part in diluting the frauds in this industry, because what we do works. And I prove it. Students like Harley prove it, and many other students in the private group, and here on YouTube, right? You guys prove it to yourselves that it works. So, so definitely go follow him. Definitely a worthwhile person to invest your time with. And I'm super proud of him, so it's going to be amazing to see where he takes it, really. Because not many people are like us, they're really not. Not many people in this industry, even some with the biggest followings, they may look like they're doing something, but they are not. They have nothing on even the newest of students I have, so. So yeah, again, all this stuff was walked. I want to make sure you guys really understand that. But since the bonds have been going lower, we've had this respect here, right? That's a bearish breaker. We were watching this little gap in here. So price came up, tagged it, and then started to really decline. We also have this breaker here that held price. So I think that we can actually measure that to the midpoint, just eyeball it. And as long as price continues to get down below these levels here, my main objective, you guys could probably see it popping off the chart at this point. My main objective is going to be here. We are at a 2.5 standard deviation level, so it may open up, give a retracement. That may, depending on what the NASDAQ wants to overall do, it may trigger in a response to try to give a pull up a little bit. Now, if we get above this, obviously, right, it'll probably continue, but we'll get to the NASDAQ in a little bit. But this continuing to go lower has a heavy impact on what the indices and foreign currencies are going to do. So if this keeps going lower, the sell-in may go away. Seasonal influence that ICT has mentioned over the years, over the last couple of years. Well, not just the last couple of years. He's been talking about this since 2016. But it's remaining true, right? Seasonality is remaining true. The yearly power 3 that I've talked about for years at this point as well, it's staying true. The low of the year was called yet again this year by us, just like it was last year. This year's excuse was the Iran war. Last year's excuse was tariffs. So I wonder what next year's excuse is going to be, right? So yeah, hopefully that concept overall has made sense over the last 2 years for you guys that have been here. And yeah, so if this just continues, let's go to the monthly chart. Okay, let me actually clean this up a little bit. You guys remember I talked about this breaker here. I said that unless it breaks outside of this breaker, right? This breaker candle here. So that unless it breaks through that, right, that midpoint and closes above, we will continue to drop. And it's just beautifully continued to drop. And we've been correct for weeks on end because we're rooted in this higher time frame and what we do actually works. Okay, we got that wick right there. You guys see that? Price held up in that. And again, I think that it's pretty rational for us to believe that this should end up becoming our potential next target. Because it's already been really accelerated, you got to expect, because every week there's a new power 3 that unfolds, You got to expect that there may be an open that takes place. It may wick up. This next week's candle might actually be a retracement candle in itself, right? So you got to keep that in mind too. Tony said, once again, we've seen the entire move happen. Absolutely, right? It's a normal thing here, and it's shocking, really. Sometimes it blows me away that we're able to do this. It feels illegal, honestly, but we do it, so we might as well just lean into it, right? And you guys are in the right place. So yeah, what we're going to keep in mind for this next week that comes out, you got to think we've been super bearish. If we take this off, we do see this large wick. So you guys know that when there's a wick with displacement, that creates a balanced price range. So not only that, we have buy side here, sell side here. So this whole entire up movement in itself is a bearish order block. Not only is it a bearish order block on like I think it would be an order block on the 2-week or 3-week. It's not quite an order block here, but we have this big wick here as well. That's encapsulated by this low here. So that big wick followed by that pull up, it closed the monthly candle there, right? Closed it there. And then we got displacement. So again, displacement with a wick that overlaps it like this is a balanced price range. So price should be able to hold that level, right? If it comes back, that's great. It could just be a retracement. The only time I will turn off my interest to want to go lower with the bonds is if price breaks up above this level here. We have this as a bearish order block. It's also a big wick on that monthly chart. We have the midpoint of that, and then we have also this swing high here. So if this takes the stops here and then gets us up above this level, that's when we'll know that, okay, well, we may look to try to target deeper levels. Maybe it comes up here at some point, but I don't honestly think that's going to be the case. We'll have to see what happens with this new Fed chair because he's going to send off fireworks, guaranteed. So it's going to be a very exciting rest of the year because the new Fed chair is much, much more positive. And I doubt there's going to be as much ambiguity or just reckless fiscal policy that will affect the American people and the U.S. economy. It should hopefully be stuff that's good to try to make the president look good. So we get a lot of good volatility and things are healthy. We see some big price swings. So that's what my expectation is. Again, we have this monthly wick level here. So I don't honestly think if we get a retracement, I don't think it's going to get too deep into this, but it's okay if it does do that. That doesn't change anything. Okay, it's not going to change anything that we do. All right. So if it comes up there, that's great. We just think power 3, right? And then we also have this as a potential target too. If it does open up and show that it wants to maybe get up there, or maybe it opens up gaps through the low. I think it's a little bit far away. Let me see, measure it out real quick. Yeah, I mean, it could very easily go down there and wick through that. Or just simply gap through it and then try to come back and return into this. I would say that if it gets below this wick here, below this low, you have to account for this wick, and it's less likely that it's going to dig all the way up to this. It'd probably be able to just stay in the lower 25% of that wick. So let's actually keep that on the chart just for reference. So we are inside that middle portion of that wick. We broke through it, so that's a PD array. So the deeper we go through it, if we come back into it, that's a PD array in itself. So it should be able to continue to hold and go lower as we're watching price move in this instance, okay? But I don't think we're going to get too much of a deep retracement. We're in a bearish seasonal influence as well, so you can kind of see the impact that seasonality has. When it is correct, when the seasonal influence is being respected, I mean, it's a beautiful thing. It's absolutely amazing. Then you get intermarket relationships to agree, and it's just like chef's kiss, right? And you can catch those big, huge price swings as long as you're framing things on that higher time frame. You'll have a lot less choppy nonsense taking place. So yeah. With that being said, that's going to be my perspective. I want to see if we can get down below this. If that continues, we already have a rough estimate of what we think the indices and the currencies are going to do. And you guys saw the overall view on the other assets too. So if we look at the yields, all we're doing is doing the opposite. because they're reverse correlated. Okay, we're not going to need this liquidity pool. This liquidity pool down here was identified when we were inside the range, but now that we've broken out and started really ripping, obviously we know what it's trying to do. We already took out that liquidity. We can use that because it's a big wick. It could be used as a discount array. And we got the highs up here, which it's actually equal highs up there too. So we'll keep that in mind as well. Come down here, get this projection. Let's see how well this aligns with the targets up there. So 2.5 standard deviation, pretty nice, sizable run up to that. Can actually pull up the indicator suite. Yeah, so sorry, I didn't realize I didn't put the right template. Okay. Let's move this over. Okay, so if the bonds again are going lower and there's a bearish seasonal influence for the currencies, the indices and whatnot, we want to see this go higher to support that. Obviously, we're getting that. We have this high to that low. We had sell side, buy side. That's a balanced price range. See that there was a stop run here. When price was down there, we were obviously looking at this to just see how it was going to behave. It broke through it, and then it inverted that level. And then it also created a stop run, high, low, higher, high, came back down, tagged the upper portion, use it as a bullish breaker. And then we see that it finished off this level. Now we have this level up here and we have this level up here. Because it's so extended like this, you got to expect going into a new week off the heels of something like this, what is everybody doing? They're looking to see price go up, right? They want to buy. They think they missed something. FOMO is at all-time highs, just like the some of the assets have been. So everyone's euphoric right now. So with that being the case, what would damage them the most? Well, price coming up into this level, dropping down a little bit, I think that would be a good pump fake, right? And they don't have to do it very quickly and immediately go higher from this next week that happens, right? They could literally just use this next week that's coming to then be a bearish week. Or we're not going to assume that that's going to overall be the case, but if it does decide to break down and shows no sign of turning, at least for the time being, we'll then be able to get into some type of counter trend idea. And then, of course, that's going to have an impact, right? It would cause a retracement in the other assets as well. But it's just something that we got to keep in mind. Again, we got this daily wick here. We're approaching that midpoint just like the bonds were to the downside. This is doing it to the upside. Again, this is positively correlated with the dollar, reverse correlated or reverse influenced when it comes to the indices, foreign currencies, and commodities, okay? And again, we got this daily wick here, or weekly wick here. So we have this high, the wicks down here. So those could be potential targets. And if price was to say open up, drop aggressively, come down into this and pretty much immediately rebalance this level here, we may see something interesting take place as a result of that. It may look to really explode. But my invalidation level, I'd say my invalidation level is going to be this gap in here. Okay. So yeah, this will be my invalidation level. So you see the new day opening gap too is being respected. It's funny too, because this level in here, when we were down here, those of you that are with me all the time, we called this entire move higher. We called this entire move lower, targeting these equal lows, right? And then once it snaps back, right, like it broke through 50% here, that was accumulation, and it respected it as such, and it was a market maker buy model, right? We were able to map out this entire thing. Just looking at the chart starts to make you remember like all the things that we've called. It's been 2 years at this point straight publicly, and going on 4.5 years this year with my private group, where we do this just every week. I'm up 7 days a week. I don't take any days off. Every single day I'm looking at the chart, and it's spectacular how in sync we've been, especially over the last like 3 years. I mean, it's spectacular, and it's not only me now, which makes me even more inspired, right? And I mean, the passion is just like cemented for eternity at this point, because it's amazing to see that this stuff is teachable. It's amazing to just see that this is really what goes on in the market, right? So again, I believe that if price does open up, we got to think power 3 right away. The most important liquidity pools, because I forgot to mention this a second ago, as we always talk about, the most important liquidity pools are the current high and current low of the candle on this daily and weekly chart. So that's Friday's high and Friday's low going into this new week. So that high is significant. Maybe it peaks up above it, uses this 50% of that wick 50% level, and then it's used as counterparty liquidity to then give us that retracement, right? Before we look to go higher, or it'll leave that available, give us that small little rejection because we're at an opposing PD array here, and then look to try to expand away from that once it tries to tag some of this. If it tries to do so, it's really quick, so maybe they don't. But I wouldn't be surprised if something like this happens in this level, or something like this while it looks to go higher. Okay, so that's the objective, that's the opinion here, and our invalidation levels are well defined. Our targets overall are well defined. The direction in which we're looking to trade in, if we were trading this market, is well defined. Our liquidity pools that are most significant are well defined, right? That being the current high and low, which is Friday's high and low for Monday or Sunday and Monday's trading, and the rest of the week if it leaves that high open. And then of course we got the weekly. The weekly low is here right at this candle, so you could see that on this indicator. So let me actually mark that and mark that. Okay. Weekly high. Weekly low. Okay. That's a little obnoxious. Holy crap. I don't know why the font is so big. So yeah, basically we got the lay of the land here. So with that being said, we also have these relative equal highs here. Clearly the 10 years looking to target that. We had accumulation, manipulation into this bullish breaker. This is a balanced price range like I talked about the other day. So price traded into that. We didn't break the 50% or get below this weekly fair value gap, which was my overall line in the sand. We had equal lows here, but now that we see that this respected it, it's undeniable that the trend line liquidity is being targeted. And I think I like this a little bit more. It's a little bit larger liquidity pool. We have this one here, sure, but it's on the way to this one. It's more significant, more meaningful liquidity pool. When it tags that, we may get a rejection. It might retrace a little bit, but you know, it's not going to upset anything until it breaks down aggressively, like, you know, like this here, or like this, right? Or like this. But we'd like this displacement breaking 3 PD arrays, okay? But yeah, so hopefully that all makes sense to you guys. We do got this high up here, but we'll deal with the rest of the 5-year eventually, because a 10-year and 30-year, you know, they're going to drive where this 5 year is going to go anyway. So, because they're correlated, right? Let me see. Was there any SMT I could show you guys? I'm very curious. Let me see. Yep. Yes, sirree. Okay. So remember what I was just talking about the trio, right? All three of the bonds and yields together. You use like the 5, 10, 30-year bonds and the same on the yields. I mentioned that you could watch SMT and it may give you a little bit of insight on what, as far as what's going to happen eventually in the near future. Well, if you take a look at this here, you see this low here, okay? And you see this low here. That's a higher low in comparison to this lower low and this lower low. Right? Do you see the line on the and from this left side that I'm highlighting to the right side? You see that low right there? This is lower in this 30-year bond, 30-year yield. And you scrub over a little bit, you see that it's got a crack in correlation. It's got SMT there. Okay. Okay, there it is. All right, so bullish SMT. And we have a bullish breaker. And price has been going higher. And we had relative equal highs. So we could see that that led to displacement. That displacement then led to retracement in here, and then it exploded. So this is a good example of what I was just talking about in terms of the importance of having all three of the bonds and all three of the yields. Because if you're stuck and you don't know where price is going to go, or you don't know where the bonds and yields are going to go, and you want to know where it's intended to go, so you can use that in your analysis. Well, if it's consolidated, well, it doesn't have to be consolidated. Excuse me. But if it is consolidated and you can see SMT like this, you just wait for a breakout and boom, it's confirmed. You can already assume that this is going to go higher off the SMT there, and the fact that, where do we come from? A finished market maker buy model. This market maker buy model, once it got traded above, created a balanced price range. So because that's the case, we also have SMT, and we also have that weekly inversion fair value gap here. SMT at a higher time frame PD array at a time when bearish seasonal influences are supposed to unfold on the bonds and the indices. And as a result, you can see how beautifully everything just dovetails together, making sense of this rally. While everyone's walking around like blind people, no offense to blind people, but walking around like blind people in a dark room, they don't know what the hell they're talking about. They don't know what they're doing. But things like this pulls the veil back a little bit and kind of shows you the why behind price. And of course, geopolitics is having a pretty heavy influence, but nonetheless, hopefully this makes sense and you can see the significance, right? I was hoping I could find an example in stride as I was talking about this stuff, so I'm glad I did. Yeah, what's up, Slim? ATM, good morning, you guys. Appreciate y'all hopping on. But yeah, hopefully that makes sense. But yeah, that's pretty much all I have for this asset here. Seems like everything is pretty much worked out pretty flawlessly. And it really has committed to going up through to the buy side. Slim, I'm doing well. Hope you're doing well as well. But yeah, so that just about does it for the overall bonds and yields. Okay. So do you guys have any questions about anything? Appreciate the sub, by the way. Whoever just subbed. I'm happy you're getting value. But yeah, do you guys have any questions about anything? Let me know in the chat before I move on. But that's pretty much my opinion for the bonds and yields. Why it's important. An added tactic that maybe I haven't talked about enough, the SMT between the trio. It's the same thing that we do with like the indices, but we do it with the three bonds and three yields. Again, this is the symbols for those of you that may not know. I know I get that question a lot too. Which bonds and yields do I follow? Like I can't find the right one. I use the continuous contract too. I don't really care about switching. I just want to know where it's headed so I can use that information. And it's very helpful, as you guys see. Okay, so if you guys don't have any questions, if you could throw one in the chat just so I know where everyone's at before I move on. And again, towards the ending portion of the call here, we're going to go over some other topics that I showed you earlier. And again, I want you guys to still think about if you guys have any questions about these particular topics. Let me pull up the list again. So these particular topics in here, whichever one or two or three or all of them you struggle with, depending on the commonality between all of you guys that are here, that'll help me decide which one I want to try to nail down. I've been really nailing down on market maker models recently. I mean, I have for years in my private group. I mean, I talk about all this stuff constantly. I'm using this stuff every single day. And in one way or another, we've talked about every one of these topics with my time here on YouTube. But again, if there's anything that's a weak spot in your trading related to these, I want you to note them in the chat so then when I come back and look at it, I know what to really focus on at the end of the call. Okay? Again, this call might be a little bit longer because I got a lot of things I want to talk about, right? So it's not just going to be a like an overview. I'll make sure that I, depending on how long this goes, if it's more than 2 hours, I'll make sure that I cut it up and just post the overview itself. But yeah, it's going to be a very jam-packed call. So again, that is all I have for the bonds and yields. So now in this next segment, we're going to talk about the DXY, use what we just talked about with the bonds and yields, our understanding of the impact that those markets have on the overall markets that we trade, like the DXY, foreign currencies, and the indices and commodities. So with us believing that the bonds are going to keep going lower and the yields are going to keep going higher until proven otherwise, that is going to continue to push this higher. You guys notice that there's a quarterly PD array here that I've talked about for literally over a year. We've been referring to the levels that it provides us with numerous amounts of times, and for good reason, right? You can see that it's respecting the 50%, the 75%, 25%, and even the upper portion and lower portion, right? It's not random that it went right to that level and bounced, right? Then we had a wick, respected that wick after a stop run. Then we had a shift, change in state, right? We had a shift in market structure here. So we'll see if it wants to continue. But overall, the dollar, given that the yields are rallying aggressively, given that the bonds are declining aggressively, also given the fact that there's a bearish seasonal influence for the indices. Let's actually pull up the seasonal influence chart for the dollar just so I can give you guys that context so we could look at it together. I think I missed a question. Fritz said T-bonds on 15 minute looks like a big gap. Like you say, it could be. Yeah, I agree with the statement, Fritz. Yeah, let me go pull up the seasonal influences so you guys have this. Okay. So if we scrub on over. It's ironic. You see that there's this high right there? You see what the date is when that high forms and all three align with bearish dollar? Right at the time that we've called the lows of the year in the indices 2 years in a row. On the seasonal influence chart for the dollar, it shows a high and then a reversal going into April. So seasonal high is formed. Dollar was bearish, right? So yeah, it's amazing. So dollar's bearish, and the indices did what? They exploded. Late March going into April, this year and last year. It's been too easy to call it, and we've been able to align the geopolitics with it as well. It's just amazing. Higher yields, not always, but when it's to sell off in equities, yeah, it's supposed to, right? If the yields are rallying, generally, most of the time, of course, it's not perfect, right? There's going to be times when it's cracked in correlation, but you know that you're in a very healthy market when the correlation that we've discussed is in place. And if the higher yields are going to continue, that should continue to push the dollar up. And we have a bearish seasonal influence for the indices. Ironically, too, look, there's a low in May, the start of May, and then a rally going into May. Isn't that what we just saw? People tell you on the internet that seasonal influence is not worth even paying attention to. It's overcomplicated. It's whatever the hell they want to say. I don't think this is overcomplicated. And can you not see the correlation there? This isn't one time. That's why the drill I give you guys when you're studying seasonal influences, go and study the last 10 years. Do more, right? You don't have to just do 10, do 20. I've done 50. So it's like, you can prove it to yourself that this stuff is worth listening to. It's worth referring to. It's not a be all end all, but if you have a bias on that higher time frame and you can couple it with the seasonal influence and it just makes sense in the chart, it makes sense correlation wise, and this is on the back end, I'm telling you, it's worthwhile. It's amazing. Like, look at the reaction here. You couple the seasonal influence having a low in May with a aggressive agreement between the three lines, right? The 5, 15, and 40 year. You couple that understanding with the bear seasonal influence in the indices and the gap up here that I've been talking about, you could see why I pointed your attention to this stuff, why it was a potential likely scenario that it could get up there, and it may not want to leave that available, right? It just took the right time in price to be able to get there. What time? The proper time of the month, proper time of the year. And then as a result, it exploded up to that level. So seasonal influence and technicals are being shown in alignment here and how you use them, right? In terms of the seasonal fundamental and then also the PD arrays and whatnot, okay? So again, very, very interesting observation. I'd be doing you guys a disservice if I didn't pull that up and show you, because some people haven't studied seasonal influences. I talk about it a lot, right? At least once a month. Or at least if I'm not doing it month to month, it's per quarter, because sometimes when the market's not agreeing with seasonal influence, obviously that is a signal in itself that it's massively, say, bullish. If the bearish seasonal influence is supposed to be kicking in, if price is denying that and it's rallying aggressively, something's happening on the back end that's making it super, super bullish. So what does that mean? You stick to bullishness. You kind of put to the side the seasonal influence until it proves itself and, does something like this, breaks down. Same thing's true if it was going bearish and you had a bullish seasonal influence, right? If the bullish seasonal influence isn't showing anything in the chart, if it's not agreeing, if it's continuously failing to go higher, then you're in a very bearish market. What do? You stick to bearishness. So that's how you deal with the times when seasonal influence is not showing up. It's showing you there's an underlying very, very strong interest to not follow the seasonal influence. So you just put it to the side. It doesn't affect you. It doesn't make it so you can't trade, right? You just have to kind of be flexible and use the tools when they're in the chart, right? When it shows that they're being effective, not imposing your will, thinking like, oh, well, if it's a bullish seasonal influence, it should go higher, and all I'm going to do is buy. That's the wrong perspective, right? You got to be able to see these things unfolding in the chart. Have it prove itself to you that it's going to follow whatever tool it is that you're using. Otherwise, just go with what price is telling you, right? So again, if the yields are going to go higher, the bonds are going to go lower. We do have is high resistance up here, right? If we do want to get all the way up into this level, it's a pretty far ways away. So we're going to have to continue to monitor this here. We have yet again got above that monthly fair value gap. It's now a reclaimed bullish fair value gap. Appreciate the subscription, whoever just subscribed. I'm glad you're getting value. I really do try to just give you guys value, straight value. I don't have an ego. I don't have any of that. I just want to see you guys succeed. That's literally it. You know what I mean? So I'm grateful that you guys get value from this stuff. And I appreciate your time. You know, I don't want you guys to feel like you waste your time. I respect your time. Sometimes there's a lot of stuff to talk about. So, you know, it's going to be long. Unless you guys just want me to give you half-ass effort and leave stuff out just to make sure that it, you know, is 5-minute trainers. But, you know, when I was first learning, I wanted everything to be thorough. I wanted to know the why. Why should I believe this? Why should I trust this? Why is this worth my time? Why am I going to use this and risk money behind it? How can I trust it? And that's the type of answers I try to get to you guys. So hopefully you guys feel that I do a reasonably good job at doing that. And again, thank you for the subscriptions, you guys. Glad you guys get value. If you guys have questions, let me know, of course. But yeah, we're getting up into this. We have that reclaimed bullish fair value gap. We'll see what it wants to really do with that. Only way that I'd be looking to go short in the dollar is if we can get back down below that. Otherwise, I think it's going to keep going. Again, we have this gap up here now. So now that we have the sell side offered and now buy side has now been delivered, we would now adjust from this high, because that was the last time buy side was offered before it declined. We had inefficient buy side delivery up here. So it was only sell side. So with that being the case that they offered buy side, we now have to pull our inefficient gap, right? Or the highlight of what's inefficient in the chart up to this level. Because now this is the only spot in this price delivery here that doesn't have the buy side delivery offered with sell side. It also doesn't even have sell side, right? Like this level here, it's inefficient on both sides. So I wouldn't be surprised if they shoot it up. Save this, right? Save what I'm saying right here. I wouldn't be surprised if it shoots up through it and then comes down and offers sell side pretty violently again as well before it chooses to make a decision to either run higher or run lower. Right? I think it's going to continue to go higher though, because again, the yields are pushing things higher. The bonds are going lower. There's no sign of them not doing this. When they start cutting rates, you know, we'll see the yields decline again, which will then send the dollar lower. And then that'll obviously be positive. Why does cutting rates lead to bullish stock markets? Because the yield market starts to drop, because that's what they're cutting. They're cutting the yield, okay? So when the yield gets cut, right, the yield markets decline. So the yield that's gained from the interest of that interest rate, right, when money's loaned or the bonds, right, because this is like 5% yearly yield for this asset to be invested in, which, again, it has a trickle effect to all the other interest rates. But when they cut the rate here, this declines. We know that the opposite is true in terms of characteristic when it comes to the currencies and the indices. If this goes lower, basically, the others go higher. So when they cut rates, this declines, the bonds go higher, right? That being this asset. The bonds go higher, and then the other assets go higher too, right? And the dollar goes lower while the yield gets cut and goes lower. Does that make sense? That people overcomplicate the situation. This is one of those fundamental elements when it comes to the news events that do actually have a heavy impact, because a lot of the news events that come out are late, and you can't really determine like what it's going to do based on the news. But when it comes to rate cuts, you can damn well know what price is going to potentially do, because it's just the way it works. You know, they can't change this unless they change the whole entire system and decouple the relationship between the interest rates, our currency, and everything that they affect. So there's a huge amount of things that would have to take place. And honestly, we'll live in a totally different world if they do decide to start messing with those things. So hopefully that doesn't happen. But for now, this is just the way that it is. And if you didn't know about this stuff, hopefully you know now. I've talked about this a lot. I talked about it last year as well here on YouTube. I've talked about it a lot in my private group. But this is the perk of being around somebody that knows what the hell's going on in the market, right? I understand not everything about economics, but I understand enough and all the key elements that allow me to make a decision, right? And how it will affect the chart. That's all we really need to know, right? At least for me, that's all I need to know, right? When it comes to these types of things, I just need to know how to make a decision to make money, right? That's really all I'm concerned about. So that's how I approach a lot of this, these concepts, essentially. So yeah, again, hopefully all that stuff made sense. If the yields are going to go higher, this should go higher. If the bonds are going to go lower, this should go higher because they're reverse correlated to the bonds, which again is this asset. So as long as the yields keep going higher, as long as we stay above this reclaimed bullish fair value gap, I believe that we'll be able to continue to see price march on through into this little gap here. So that's where my eyeball is going to be at. I'm actually going to clean up some of this. You guys see that this weekly bullish order block here, price beautifully respected that. It's also a monthly. Let me actually move this up. It's actually a monthly bullish order block. So there's that monthly bullish order block. Inside that monthly bullish order block, there's a daily bullish order block. So this is the nested nature of the PD arrays. If you're inside of a larger PD array, you always want to look for the lower time frames and see, okay, well, if this is a monthly order block, hopefully there's a PD array. Most of the time there will be, but hopefully there's a PD array in there that can be nested inside of that would then make sense for a further rally to take place, right? It's just further details, the fractal nature in price action and the fractal nature behind these concepts. When you're inside of one that's on the higher time frame, the lower time frame should also continue to help agree with whatever is happening on that larger perspective. So like I said, this example, we're in a monthly bullish order block and a weekly bullish order block, which was down here, right? Like I just showed you or had on the chart. The monthly agreed, the weekly bullish order block agreed with bullishness. Price was failing to go lower. And then we have this daily one as well that got traded above. And then at this point, all three of the PD arrays that are nested inside of one another have been triggered in to continue going higher, right? Getting above this level turned on all three of these order blocks, right? The monthly, weekly, and the daily. And you could see the dynamic response off of that higher time frame level. And the respect to this weekly wick here as well. Yeah, let me see the weekly real quick. So that weekly wick, where was that? 23. So that weekly wick was this right here. Yeah, those are equal lows. Yeah. So this is the wick that this is referring to. So I just wanted to point that out. Okay. So yeah, let me erase that. So again, it's pretty much all I really have for the dollar. I think that, again, unless it breaks down below this, we'll continue to see this go up. There's really not much to really go against this overall analysis. I do think that this is highly likely. Whether it opens up and looks to try to decline a little bit before it looks to go, I mean, that's obviously permissible. But as long as we stay above this level, I mean, it could come all the way down into that and tap it. But as long as it stays above this upper 25%, as we like to see with all PD arrays when they get utilized, we should still be good to keep going higher, right? I wouldn't be surprised, obviously, if, you know, some weeks we'll end up having the bearish candle as the weekly delivery, because you got to remember these higher time frames is what everything is going off of. So it's not always going to be one-sided, straight bullishness, but that's why you like to catch price even on the weekly perspective when it looks like it's doing something that would promote a move on the 5-minute chart, but you see the same thing happening on the weekly chart or the monthly chart. Because if you're in a level that should be reactive, what do you think is going to happen on those lower time frames? It's probably going to fall in line with that weekly perspective or monthly perspective. So if we're in like a weekly bullish order block on, say, this week here, it's pretty likely that this is going to respond. And if it doesn't respond here, but it keeps this order block available going into the next week, you can anticipate that this week should start moving, unless it's going to be in a big consolidation. And there's really nothing you can do about that. But you want to be able to identify this stuff, right? So if you want the best of the best setups, this is how you want to frame things. You want to wait. You can take a trade every day if you want, right? You can engage every single price swing, and sometimes I show it, with us doing it as well. But for newer traders, for traders that want to be very selective, very specific, this is in part how you become very selective, right? This is inside that monthly bullish order block, like I said, right? This weekly candle here was basically trading down into that bullish order block, right? This next candle, right? It's pretty reasonable if this level's going to hold and it's not going to give it up, right? And if it did give it up, it'd go lower. But if it's going to hold, it should be able to deliver pretty aggressively very soon. If not the current week, like the next week after the current week. And we could see that this week opened up right out the gate after it accumulated and really slowed down and dug into that higher time frame PD array. It then expanded aggressively. And you see on this lower time frame relative to the monthly and weekly, it triggered in a change in state of delivery here on the daily perspective, which also at this point confirmed these higher ones too, the monthly and the weekly PD array. So everything was nested inside of one another. Plus you see the failure here with this wick, right? You see the equal lows there being left intact. It's definitely suspect to see something like this, but once you got this displacement, it's off to the races. You're thinking only buys. And then again, bearish seasonal influence for the indices, bullish seasonal influence for the dollar, higher levels up here that were very open and obvious. I put a caution flag around them saying you got to watch for this. It might want to go up there. And then of course, everything is pretty much aligned with both seasonality and just overall intermarket relationships, right? With the yields and the bonds and the dollar. Okay. So again, this is pretty much all I have for the dollar. So I think we'll leave it there. Do you guys have any questions about the dollar before we move on? Give me 1 second. I'm gonna go run to the bathroom real quick. Yeah, drop your questions if you guys have any. But I'll be back in like 2 minutes. All right, we're back. Sorry about that. Okay, no questions. Okay. So with that being said, that will be about it with the dollar. Hopefully everything I talked about makes sense. But yeah, now we'll move on to the currencies, which this is spectacular. We literally called the entire beautiful decline in here. I mean, it's amazing. It's definitely amazing. We don't really need any of these up here. I think that we're going to have a pretty sizable continued decline. I do believe that we should treat from this low to that high as a BPR. Technically, if we move up in time frame, let's go to the weekly. We stick to the daily. So in this daily chart, instead of us using that whole range, we can actually just use this. So this right here is a mitigation block. Why is it a mitigation block? We have a high, low, failure swing, breakdown. Those of you in my private group, this is a type 2 dealing range. Okay. So we should be able to anticipate this potentially coming down, targeting this. We do see that this is a beautiful, beautiful situation here with that failure swing. So if it does break through that, we can also look at this as a possible market maker sell model. We got our accumulation in here. So accumulation on the left side should be able to act as resistance on the right side, going lower. On the daily chart, we also have a suspension block. Okay, so as long as it stays below this, okay, as long as it stays below that, I think we'll have a good chance to continue. Breaking down below that, we have this as a balanced price range, right? Delivery and sell side through this previous gap. So displacement coupled with displacement, when it returns to that range, it's a balanced price range. It should not come back beyond midpoint. And we should be off to the races trying to take out this low resistance liquidity here. So you guys see this low and then this lower low. Price rallied up, created a failure swing here. So this is a failure swing, right? This here, because it took the stops there, could have eventually led to high resistance because it's a stop run versus a failure swing. But because it left this failure swing here, right? We got a low that took a low over here, but we have that failure swing. So now we have that failure swing to look at, and we have this failure swing as well. So I think that if we can get down through into that level, this is consolidation. So us trading into this consolidation may, present a little bit of a problem. This kind of depends on how aggressive this is going to want to be, how intent they are in targeting the lows. But once we get closer down through the midpoint of this, right, from this low here up to the high, that midpoint there, once it's breached, it's all low resistance in my mind, because we got low resistance here, low resistance here. So yeah, my overall view is going to be the price is going to get down into that. We can actually go from the high extreme down to that low. See, does my projection thing, will it kick the projections off? Didn't want to get it. Okay. So we'll just manually put this projection. How beautiful is that? Look how beautiful that is. Yeah, if the dollar keeps rallying and we continue to see the bonds and yields do what they're doing, this is a market maker sell model. And I mean, that looks absolutely beautiful. That confluence is literally, look at the two standard deviation projection from this high down to that low to the tick. That is beautiful. And if the dollar keeps going higher and we end up getting up above this high, this will end up down below this low. And this will end up down below this low. You guys see that this is, well, I guess we do have a failure swing there too. So we took out the stops here, then immediately came down, treated that low as high resistance, used a rejection block there, and then rallied up. So us coming down into that, we've left that failure swing for later, this low and that low. So it may slide down pretty easily, just like this one, once it gets beyond the 50% there. Wait, why is it not? Okay. So yeah, that'll be my opinion in terms of where I think this is going to go. I think we'll be able to get down there pretty aggressively. But it's been a very, very nasty decline in here. So they may want to play games a little bit. They may want to come back up, at least tag this volume imbalance. But then again, there's this weekly fair value gap from a while ago. It's still going to be used. It's in that area. So if we move up, let's see, is there any closer one? It's right there. Definitely want to see if we can use. That one was used. Definitely want to keep tabs on this. This will turn into a inversion fair value gap. Or at least it should, right? If it breaks through that, as long as we continue to keep blowing these out, that should be pretty nice. We do have the consecutive down candles here. Price trading into that. That's an opposing PD array to a downturn. So with that being the case, us pulling down into that, it may give us a retracement a little bit, because you guys know that if we're trending a particular direction, when it hits a counter PD array, that's when you can set up counter trend moves a lot of times. All right, doesn't mean it's going to full on reverse, but it should be something that you pay attention to, because then you can kind of gauge like what to target, when to get out, when to expect a retracement, and then also when to consider a continuation. Okay, when you get a change in state off that counter trend move, if you get a change in state back in line with your narrative and it's still valid, right, everything's in alignment, you could then know that you're in line with the continuation. Okay. So some of the key levels, right? It's the same on every asset, right? Friday's high, Friday's low, previous week's high, previous week's low. So that's here and all the way up here. It's definitely not getting up there. It's definitely not something that's going to be very interesting in terms of targeting. Do we have SMT at the highs? Oh yeah, we had a huge SMT. I have it. Yeah, I had it marked. So yeah, this SMT prevented these equal highs from being taken, right? It's triple high, but they said, nah, because the bonds and yields decided to hold precedence over this, and that's just the way it is. Okay, we got a low, high, lower low, so that's a breaker candle here. So anything coming to this level, if it was to get up there, which I don't believe it will, I think that we're not going to even be able to get above this level. Because if this is a sell model, which I believe it is, we will not get beyond the 50%. So we don't even really need that, because we already have this overlapping it. You could use this one if you wanted to, right? The accumulation on the left side. This should act as an inverted BPR when it trades into it. You know, that's something I wanted to mention too. Have you ever heard anybody on YouTube or anywhere even mention the word or phrase inverted balanced price range? I don't think so. I think I want to make that go viral. Because hey, I mean, it's a thing. It's a PD array that ICT's taught, but I don't hear anyone talking about it. except us, right? So that's something to study. Anything that I've classified as a BPR, everything has an inverse nature to it. A BPR is a PD array. All the PD arrays, for the most part, most of them, are balanced price ranges, right? So they can, they're all part of the same family. They just got different variations. Yeah, I don't think anybody talks about it. I don't think I've heard one person talk about inverted balanced price ranges. I haven't heard really anyone even talk about the displacement after a wick forms. Like the wick followed by displacement, that's a balanced price range. That's a PD array, right? So there's a lot of things that we talk about that nobody else talks about, which, a lot of people claim they know what they're talking about, but, you don't really have to know every concept, of course, but, a lot of these people are liars. It really irritates me because they got a lot of people listening to them, and those people are going to be hurt. It's unfortunate. But hey, I had to get hurt to figure out like who to trust. But hopefully traders in that situation end up finding this channel because things that we talk about will save you a lot of heartache if you just listen. It's not financial advice at all, of course, but the stuff we talk about works. So I think that this is going to definitely get down there. If it does get down here, we'll see these levels get inverted. We got a fair value gap in here from the 16-hour. Go to the 4-hour, we can get the 4-hour perspective too. So again, I definitely just don't want to see it get up here beyond this level. We have buy side, sell side displacement. If this is a sell model, the nature of a sell model, when it delivers buy side and then delivers sell side, where price is currently at, all that price delivery prior can be considered balanced. If, of course, it's going to like fully unload, right? If it's going to completely unfold down to there and it's going to be respected and we can continue to trust it, we shouldn't expect it to come all the way up here. That'd be a problem. We wouldn't want to see that. Can it do it? Sure. But that tells you the kind of conditions we're in. And then once it starts breaking multiple PD arrays to the upside, we may see a failure to deliver that market maker sell model. And if we can get this high to that low, if price ends up breaking this 50%, you have to immediately turn to a buy model. And then this would be accumulation. Once it gets above that, you could then look at that as inverted balanced price range, right? Because it was balanced when it was going lower, right? So sell side, buy side, sell side. Buy side respected the midpoint and then declined. So that's all balanced as it pushed away, supporting sell side. So once that's given up to the upside, it's now inverted. Okay, so that's inverted balanced price range. Okay, so that's what my perspective is on why I believe we shouldn't come to these levels. It's just simply because of what I just mentioned being a fact. This gap here, yeah, it's there. People may be worried about it, but you got to think buy side fully overtook it. And now what happened when we crossed over it? It was inefficient to the sell side. There was only buy side candles. So what did they do? Rapidly offered sell side to fulfill those orders that are in that level for people that got left behind. Whether they lost or won, it doesn't matter. It's just inefficient. They weren't able to participate. Okay? So that whole area there should be balanced in itself. And so all of this should be balanced. And we should not come up here. This will be my invalidation. We shouldn't even get up there, though. If it does want to get excited and come all the way up here, the line in the sand is here. Because once it breaks beyond this level, we're in a buy model. And that's how we'll treat it and then look for buys. But we're not going to have to really look at that at the moment. Okay? So let me just throw this in validation. Okay, it's our sell invalidation. Okay. And of course, as we zoom in a little bit, we could start to see a big wick in there. So another thing I'm going to want to pay attention to. It's going to be that wick, these wick levels. I got such bad allergies lately. Medicine's not working. Let's make it smaller so it's not so loud. So we got the 50% there. It's quarterly bullish order block. So yeah, that 50%. So basically right at that low, I mean, we could still just remove this, honestly. Because right at that low of this weekly inversion, that's the 50% of that wick. So again, we have the wick there, 50%. We have the fair value gap. And we have this volume imbalance. That's 3 PD arrays. So again, if it just starts to rapidly reprice up there, while we've mapped out this as a potential sell model to target these lows, if it starts getting up through that, you know, you got to kind of be cautious because it may not fully want to go lower anymore. It may have just looked to come down, bring them to a discount, and then create a failed market maker sell model to then try to go up. I don't believe that's something to worry about. I'm more concerned with this treating these levels as resistance and then us looking to target sell side down here. Okay. So hopefully that's easy enough to understand. Let's put that price level. Okay, it's obviously a bit away, so it's probably going to take like maybe 2 weeks, depending on how aggressive it could be. But I mean, if we do another thing like this, we'll get down there by the end of by the end of this week. So we'll see what happens. We have May. The open price of May was up here. Open price was right there. So what did they do? SMT was at the highs, dropped down. They attempted one more time to get up there, and then we gave a type 2 dealing range below this low that easily targeted this. We walked this entire thing. Again, we literally talked about all of this taking place or anticipated this was going to be the case, especially when it broke this. We had that failure swing. That's low resistance. We talked about the midpoint here, right? It's going to have to stay above that midpoint from this high to that low. That's the accumulation. Manipulated above. Came down, kind of danced around, and then it gave up the ghost going lower. So we're inside of a very reliable market maker sell model framework here. And we also have this suspension block for the euro. Very similar to what's happening over here. I see a very similar thing happening on the euro as well. We have this wick here. This has a little bit of an easier way to try to retest this level. But again, we have buy side, sell side. This is a market maker sell model in itself. So if it's going to truly be a market maker sell model, it should hold. Okay. And then again, we have this larger market maker sell model too to watch. And we have that accumulation right there. So that should be a balanced price range. It should be inverting it. It's a balanced price range when it was going higher. But now that it traded through it, it should act with the inverse nature. Okay. So we should be able to see that continue. We're in the suspension block here on the daily chart. So that should continue to hold up to that midpoint. So preferably it never even comes up into this level. But if it does, you know, I'm not going to be too concerned. I will start to be concerned for shorts and most likely get rid of them if we were to break through the midpoint of this weekly wick here. So that's going to be my line in the sand for that. I might as well just write it in. I don't know why the hell I can't find it. Okay. So that'll be our weekly wick invalidation level. And again, we should be able to see these levels hold in here. We got the terminus there that's pretty solid. We have, let's
Let's get a projection from the highest high to the lowest low. Up at the top up here, that's the breaker. Let's get a projection. Let's see what that does. That projection's a little bit deeper. Pull it up a little bit. From this high to that low. Still has some alignment, but I think the euro is a little bit more clear. We really only need one of these to really submit precision-wise. I mean, you can mess with these lows and see which one hits exactly. I think that one's the closest to the main target that we're looking for. Aside from the projections, we have the market maker sell model, and it looks like we should be able to get down there with this failure swing, and we'll see. It's been really rapid, so it's excited. We have fundamentals agreeing with us, seasonal influence being bearish, currencies, well, DXY being bullish, the bonds and yields promoting downside here and then bullish in the dollar. So we'll see how long that lasts. But we're in a moment of bearishness. We're about to go into the summer months. So, you know, things could slow down, but it depends, right? We got to see what happens with geopolitics, because that seasonality where the summer months is kind of shitty, that may get sidestepped, and we may be really, really active, because I think the war is about to kick off again in Iran. So, you know, get ready for volatility, right? We'll be here to deal with it. We've navigated this whole entire terrain pretty nicely. We haven't really had too much of an issue. Everything that we've called out, for the most part, 80, 90% of the time has worked out. I don't think there's been a week this year, is a big controversial statement. I don't think there's been 1 week this year that we didn't call the correct direction. And you can go check all the Sunday calls and tell me if that's the case or not. But you guys that have been here for a while probably know what the answer is, honestly. But yeah, so these are my levels for the currencies. So we'll keep these things in mind. I'll keep you guys updated, obviously, as we go through the week. Those of you in my private group, you guys know we'll be watching this live. And we'll see if we can't get it to go down here, right? We'll see if we can't get the market maker sell model to complete. Okay. So we'll see what she wants to do. Okay. But that pretty much does it for the currencies. You guys have any questions? Just throw one in the chat if you guys don't have any questions. And then once I get that confirmation, we'll move on to the main event. Where did the thing go? Appreciate you guys for sticking with me this long. I know that we talk about a lot of stuff, but again, like I said earlier, you're either going to want to learn and have a thorough explanation of why you should trust things and have an organized process, or you're not. You know, and you're going to want to be, you know, just like that that student that doesn't really like to learn, just wants to make money. Ironically, if you just want to make money and you don't want to learn, you're not going to be able to make money, right? So it's the way it is. But yeah, so with this stuff being said, hopefully you guys have gotten value so far. Don't forget to like the video, subscribe to the channel. Really helps the channel out. But now we'll move on to the indices. Let's actually pull up all three of them. So we could see that the Dow has very much punished buy-side delivery. It's had a hard time creating new all-time highs for whatever reason. But we've had one, two, three, 4 drives, and now we got change in state of delivery. So that is a very, very significant signal that price is probably on top of seasonality, going to want to go lower. Okay. Yeah, the money is a result of definitely putting in the work, being educated properly, being with people that know what they're talking about, doing things that actually work, that are provable, that you see every single week, and being disciplined more than anything, and managing risk properly. Discipline and managing risk properly, like we started this call talking about. I mean, it's more important than any concept you will ever learn, because you can learn everything that I've talked about, everything that I continuously talk about, every concept ICT teaches. But if you can't keep your money that you make and you always give it back because you can't stop, or you're over trading or over leveraging, it's going to be a real issue, and that's when trading becomes impossible. And it is impossible if you can't know how to keep your money, because it's made to take your money. So you have to have a plan to combat that. So, but that's why I do things the way that I do them. And I don't blow smoke up your ass. I don't tell you, hey, here's a signal here, here's a signal there. I give signals for those that pay attention, right? You can see kind of when I'm hinting at something, but I'm not licensed to give trade advice. So, and I don't want you to be dependent on me for signals. I want you to be able to do it on your own. Because I can easily come out here and make a signal service and, go that route. But I choose to more so be focused on, let me build traders up. Let me make it so you don't have to depend on nobody. Because you can't build a career off of dependency. Hey, have this guy tell me what I should do, and that's how I'm going to be rich. It doesn't work that way. There's not one signal taker, signal junkie that has gotten rich on trading. There's not one. You notice how you never heard a story about people like that? You hear lots of stories about ICT traders that are independent making money. And other styles too, right? The people that do things on their own, have experience, manage risk properly. But there's really no, signal takers that have gotten successful. Maybe made money here and there, but they don't know how to keep the money because they never learned, because they don't want to learn. So yeah, with the Dow, like I said, there's 1, 2, 3, 4 attempts, and now we got this change in state of delivery. So that's a good sign for this to want to really attempt to get down there. We obviously have pretty clear liquidity pools to aim at. These are the main ones, including this one here. So these are going to have our attention all throughout the week. We do got this wick here. Going to be paying attention to the quadrants as price opens up. Those should be very sensitive. We should, honestly, if it's going to be extremely bearish, and we are going to, in fact, continue this pretty nasty run lower, I think that we should be able to hopefully see it stay below this lower portion here. If you take this low to that high, that's the weekly range from last week. Here's a gem ICT talked about that most people overlooked. He even said when he explained this that they're going to overlook it. And I don't see anybody talking about it. But the best shorts, if you're looking at whatever perspective, right? If you're on a weekly chart, for example, right? If you're looking at the weekly range, the next week, right? That previous candle's range, the best shorts are going to come from that lower 25 to 50%. So price opens up and rallies up, stays inside this lower 50 to 25%, 25 to 50%. Yeah. It should not go beyond that. And the best shorts will come from below it, right? While people are looking for, this high to this low, seeing it come back to equilibrium, we haven't blown this low out. So when it blows that low out, then a new dealing range is created, but it's not there yet. So we're inside the previous week's range. Same thing would be true if we're inside the previous day's range. the next day that comes out, the best shorts are going to come from that lower 25% of the range. Right? You can kind of think about this from this perspective too, right? So you have, whoops. So you have this, say this is the daily chart, right? Let me draw this out real quick for you. Just gonna say this to really drive home the point. So if this was the previous day's range, okay, say it's a previous daily candle, because you're trading like a daily range, right? The daily candles. The same thing's true on the weekly perspective. But if this was the previous candle here, right, the previous daily candle, the next candle that opens up, we're thinking power 3, right? So if we're bearish, it's going to go up and then want to go down above the open price, then below it, as it reaches for whatever PD array or liquidity pool is going to reach for. Well, when that opens up, we want to see that next candle stay below the lower 50 to 25%. That's where the best shorts are going to come from if you're bearish. ICT said this in a Twitter space in, I think, 2022, late 2022, I think. I have to double check. But he said it in a Twitter space. And that's probably why most people missed it, right? Because, you know, they're not like forensically studying the Twitter spaces, which I encourage you to do. Being part of my private group, part of the process for psychological management and just development, I encourage all of you guys that are in the private group, right when you join, to listen to one Twitter space that we have archived a week. More if you can, but you don't want to listen to more and then not be able to take notes. You want to take notes. You want to write down things that are mentioned that are significant. And then as you get better, you want to keep re-listening to them, because then you rehear things that you probably didn't hear before, because your attention's on certain things when you listen to a lecture, a person teach, or a Twitter space. You're looking for buzzwords to satisfy your bias and what you're going in there to learn. But when you get more advanced in things, you start to understand things that are more important. You start to recognize things that are more important. And this is one of those things, right? You listen to the Twitter space or lecture once, you may not have picked up on something like this that was talked about. But then as you get better, as you get more advanced and you understand more of the things that are important, things start to stand out more than they would have before with the first pass through whatever content you're looking at or Twitter space. But the lower 25% of the range, if we're bearish, preferably it stays in that lower 25%. Just like when we're trading into like an order block, we want to see that upper 50 to 75% respected, right? It respects it, then price is going to keep going. Same thing with this, right? 50%, we want to see it stay in the upper 25% to keep going. Same with the wicks, that upper 25%. If it's bullish, we want to see it closing above that all the way up until it doesn't. So we're inside this previous week's range. So that lower 25 to 50%, we want to see price on the next candle stay inside that. Preferably the next weekly candle does something like this, right? We may shoot a wick up. Maybe that wick shoots us up into the midpoint of this overall range. But preferably it stays on a closing basis below, right? And eventually we close below when we end the week, okay? Does what I just described and explained make sense to you guys? Because when you go do back testing, this is one of those things you're going to be shocked. It's shocking how much this happens. And we talk about 25 to 50% of the range all the time when we're talking about PD arrays. It's not only just for just PD arrays in general. It's also for ranges. So if you're bearish, you get the previous day's range or previous week's range or the previous hourly range, right? Depending on what perspective you're looking at, and looking to frame things on, it should stay in that lower 25%. If it's bearish, you just reverse this logic if it's bullish, okay? Like if it was bullish, right? You would then take the previous candle's range. Whoops. And then you would just try to do the same thing, right? This current candle should respect that upper 25 to 50%, upper 75 to 50% of that bullish, the previous bullish candle's range. And your best buys are going to come from that. You couple that with power 3 on the daily chart. It should be below the open price, but in the upper 50 to 75% of the previous day's range. Now you've literally just cornered price in to where the best opportunities are going to be. Of course, you can break things down even further with the standard deviations, right? With central bank dealers range or Asia, right? So things all kind of coalesce on top of one another. But hopefully this here is simplistic enough for you guys to understand, because this stuff is highly accurate. I'm telling you, go back to any trending environment, right? And just look back, right? Like this bullish candle here, right? The upper 25 to 75%. Okay. Did price stay in that on this candle? Yep. How about on the next candle? Yep. How about on the next candle? Yep. Right. Kind of got stuck in consolidation, so kind of chopped around. But nonetheless, you want to go into each daily range, each weekly range, thinking about this stuff. This is some stuff that you want to be noting and paying attention to, right? And again, in every circumstance, not every concept is going to be unfolding. But when the time arises where it should unfold, like if price is trending like this, you're going to want to be paying attention to these things. It's just one of many different tools that we have in the toolkit and topics that we teach here, okay? Yeah, hopefully that makes sense. So I do believe we should stay in that lower 25%. I'm going to do the same thing with this here. Okay, so if we take this and paste this in for the NASDAQ, we got that low there, and we got that high. So the best shorts are going to come from below 50%. This is going to be a change. This is a change in state here once we can close below it. So if you're not 100% confident, or if it just hangs around a little bit, you just got to wait for NASDAQ to break through this, and that'll be a change in state of delivery. We already have buy side and sell side. So all of this already, just from this level up, should be a balanced price range. If it's going to be bearish, this from this point on, once it breaks that low, should act as a BPR, and we should not even attempt to get back up to the midpoint here. Okay, and if it does, then you know we're back in line with continued buy side, and things are not going to go lower yet. But I think that there's lots of things aligning that do encourage us to start considering the possibility for short ideas to unfold. But we'll see. We need to start seeing things get violated. This right here breaks down below it. That's a change in state of delivery. All right, we already gave a early sign. If we move down to like the 16-hour, 8-hour, 4-hour, at a pretty aggressive early change in state there, and you see that it kind of pretty much respected it and was off to the races. All right, so the 2-hour gave you the early confirmation, early sign, but you're really confident in a change in state of delivery when it can agree with the daily chart as well and hit the daily levels, because the daily levels is what all the institutions are going off of. It's the real meaty, like legit portions of narrative. It's on those higher time frames. Okay. So once this, if it can get down below here, we've now officially changed state. very reliably, and we should be able to come and wipe all of this out. And I believe we'll be able to come down and attempt to target this. But before it gets there, we have this low, this low, this low, the wick levels. So all of those things are targets. It doesn't have to just be the big thing that you're aiming at. Okay. And then once this wick, if it trades through it, that becomes an inverted wick, and it should be a premium array, and it should continue to drop until it doesn't, right? And then we have a lot of things down here to target. Lots of trend line liquidity, lots of just sell side that's left alone. And if a war happens, right, if the war kicks off again and all this stuff is screaming at the rooftops that there's a likelihood of shorts taking place, you can see geopolitics plus technicals fitting right on top of one another. So we'll see. You know, if there's any wartime stuff that takes place, it should be a catalyst for us to get down and target some of this. So we'll see what happens. Okay, so do you guys have any questions about anything? Affinity MXM, MMXM. Appreciate you saying that, bro. Once we're done with this, we'll get into other topics and stuff like that. But I always like to be very thorough with this stuff. I'm glad you got some value here, bro. Appreciate your time. You're welcome, by the way. So yeah, that's pretty much going to be my thoughts for the NASDAQ. We're going to open up and obviously think power three. This whole upper portion, we got buy side, sell side. We've already broke through and closed below this order block. So my intention is to look and see if we can't target this down here. If we can break down through this, like I said, that's our official change in state. We've had early signs, but we're at all-time highs. You don't want to pick tops. You know, let it prove it to you. Give up the best possible idea at the highest of highs for the more reliable, confirmed, trustworthy lion's portion of the move, right? Wherever that may be, okay? So yeah, we'll keep this stuff in mind. This is my opinion on the NASDAQ and the indices. Our reasoning behind why this is declining. Think about it. We built the narrative of what we believe the indices are going to do well in advance, right? Right at the beginning of the call, when we were doing the bonds and yields analysis. With that stuff on the back end and all the other analysis we did too, it makes this very easy. You determine what's potentially going to happen in like 5 minutes. You know, it doesn't take 2 hours to do this. I'm explaining everything, trying to get everything explained in depth so you guys can grab onto it and go ahead and do it on your own. So it doesn't take 2 hours just because I take 2 hours to do this because I'm trying to teach you. It takes like 10, 15 minutes, honestly, eventually. Alvinity said, quick question. In relation to previous day's range, can I implement that previous session range to look for a scalp? Hey, your brain's moving, bro. Like I said, this is fractal. It's not only for the weekly. It's not only for the daily. You can do it hour to hour. You can do it 15 minute to 15 minute. You can do it 4 hour to 4 hour. You can do it 8 hour to 8 hour. Any time interval that you want to think about. The same rules apply. But the most important thing is that you're in line with the narrative, right? Because you know, if you're trading against the higher time frame narrative, trying to go short on like a 15-minute range, trying to use that lower 25%, but we're trading into a bullish order block on the daily chart, you can imagine it's most likely going to fail and it'll go the other way because the alignment is not properly placed time frame to time frame. So that's when concepts fail. When you're inside of a bigger narrative trying to do something on the lower time frame, and the bigger narrative is going to be holding precedence and then takes off while you're still stuck on like the 15 or 5 minute or seconds chart, right? So yeah, you're welcome, bro. One of many gems, one of many. We're not even scratching the surface with these calls. Everything can be taken even further depths, you know, just like that concept I just described. that thing can be broke down in many ways, right? So everything is very versatile. You plug it in, and over time, you learn how you want to really apply it. So yeah, does anyone have any other questions? If not, I'm going to pull up that list of topics, and we can go over like one or two of them that most of you guys are having trouble with, so we can maybe answer any of those questions, get that stuff ironed out. But yeah, let me know if you guys have any questions. But this will pretty much do it for our weekly prep portion. So hopefully you guys got value, and we'll see what happens. So yeah, let me know in the chat if you guys have any questions. And if not, we can pull up. Where's it at? So pull up this. Let's see what's going on. Okay, so if you guys don't got any questions about the analysis we've done today, hopefully everything makes sense. For many of you, it should be just like review. You should be able to be like, oh yeah, it makes sense. Because we do the same thing every single week. It's never different. Only difference is it's a different moment in price, but the contents are the same. Okay, analyze gold. Okay. All right, yeah, let's go do that real quick. Let's go pull up gold real quick. It's been a minute since we pulled up gold, huh? But Tony, you know, those of you that were with me, we were calling out gold, talking about gold. Gold does what we say too. It's no different. Where's it at? Yeah, gold took a dump too. Seasonality. I'm telling you. I'm telling you. Damn, yeah, it's been a minute. Let's go my old templates. Holy crap. So let's go to the quarterly chart. I'll take away crude oil for a minute. So yeah, we got silver. What a nasty manipulation. Mind you, there's not enough gold and silver to fund the amount of interest. There's just not enough gold and silver to get behind all these contract values. So I mean, it's not going to go shooting higher. They've been restricting it for so long. Something right off the bat that I notice, that I hope you guys notice too, or should eventually start to notice right away. We have here. Let me actually just remove everything. So yeah, one thing I noticed right off the bat. Let me know what you guys notice right off the bat when we're looking at this chart. What's the very first thing that you see in price? Yeah, oil and gas. It's from the war. It's heavily manipulated by London, apparently. You guys should go look up the YouTube channel called Promethean Action. I shouted them out before, but they make a lot of sense about what's happening in the world right now. Like on the back end, economically, it makes a lot of sense. A lot more sense than the news tells you, because they just want you to think one way or another. The facts on the back end with economics and power structures and all this stuff that's shifting, it's pretty insane what's going on. And you'd be very surprised to understand how much London has an effect on things. So yeah, what's the first thing you guys see in this chart, this gold chart, when you look at it? There's one thing that stands out tremendously. It's like the biggest thing pretty much on the chart. Can you guys name what it is? You guys got any guesses? Don't be shy, yo. Don't be afraid. Don't be shy. Okay. Okay, Mike said no BPR. Okay, what else? What else can you guys shout out? No sell side. Sell side's widely available for sure. But yeah, so the first thing that I notice here that is heavily impactful when it comes to determining whether price is going to reverse on an asset is how we are treating this wick here. Okay, so this wick right here, if this closes like this, that is going to be a rejection block and a pure fractal high that's respecting that wick. We did something similar to this when we looked to trade the high of the year at the start of the year. There was a huge wick on the NASDAQ that price was trading into in January. And I said that if it respects that wick midpoint and we closing below it, we're going to start reaching for that quarterly fair value gap that we pointed out in January, which it ended up reaching into. We called it before the fact, right? Part of my ability to have been able to do that was identifying this type of signature. When there's a fractal high on the monthly, on the weekly, daily, quarterly chart in particular, you can expect that the next 1 to 2 candles should be able to print in that direction towards some PD array, even if it continues to be bullish. Okay. When you see this type of thing happen, short term, it's going to reach against the overall narrative. So with this happening like this, unless it respects this wick here and then starts to displace aggressively beyond the 50%, we're due for a pretty sizable run down to that sell side. And mind you, seasonality for the indices is bearish. It's also bullish for the dollar. It's also bearish for the commodities. Seasonality is in commodities as well. Okay, so we have these levels in here to pay attention to. So I really do believe we should be able to get down there. Part of the reason I think that it could happen is because the wick here is being truly respected. We're literally going to create a rejection block. So if this quarterly candle closes like this, this is a rejection block that's now formed off of a wick rejection after it's been one-sided for literally months, for 1, 2, 3, 4, 5 quarters straight. So we're due for a retracement. If this was the 5-minute chart, wouldn't you expect that there should be some type of retracement? I would. I wouldn't be demanding to pick a top, but this is starting to show pretty clear evidence that it's going to want to dig a little bit lower. And you see the bearish seasonal influence really amplifying the sell side delivery. Okay. So if we go from this quarterly chart, drop down to that monthly chart, all right, we have a change in state of delivery. We have a trade into that order block. Price is closing below it. You see the wicks? It's not closing in that order block with these bodies of the candle. Okay. So it clearly looks like they're very much interested in trying to pull this down. And once you break through the 50% of this wick here too, that sets the stage. If we can close below it, that's an inverted PD array. So it should act as resistance. We have buy side, sell side, right? We have displacement. So this is balanced in here, especially if it trades through it. So that's yet another reason, right? We have a large wick, another large wick. All of that is offering very balanced price delivery in there. The only thing that's imbalanced in this price delivery here is this level down here, right? And this little piece in there. If you want to refine this a little bit. The rest of it has a lot of trading that's balanced in there. So the two areas of interest I'd be looking at, specifically things that pull my eyes aggressively, is the fact that there's no sell side candles in here. So that's inefficient. Only buy side delivery. So the only way that they can get that to be efficient now is if they offer sell side into it. We're at a time where seasonality is bearish. We're at a time also where we're seeing that this wick here, this large wick, is being respected. You even see this daily wick here being respected too, up to the 75%. We ended up closing back below the 50%. So what did it do? The next couple of weeks, or in this case months, it ended up declining, and it's still doing it. The only way that I would look to try to be bullish in this is if we can violate this order block here. Otherwise, all of this is balanced, and now we got imbalance down here. So it's probably going to look to trade through that. And once it breaks through this fair value gap, or this wick here, 50%, it's off to the races. And we have no stop runs in here whatsoever. All this is likely liquidity to be targeted. The only stop run previous to this, previous to this one right here, the only stop run that took place was way over here. So in November of last year, or November of 2024, there hasn't even been a stop run since almost 2 years ago. It's just been parabolic. What goes up must come down. And it looks like we may be showing early signs of a come down. Okay. So again, the only way that I'd be looking for bullishness is if it kicks through this, because then that'll disrespect this and we'll just go back in line with, the run higher. This is a failure swing right here. So if we can get above this, I'd look to use that as an inverted 50% of the order block. And then we should be able to see that hold this support and then push price through up here for our framework to then target the buy side. Otherwise, I think that we should continue and look for these inefficient pieces of price delivery down here. And hopefully that logically makes sense why this should be, or why this is my perspective, right? It's very logical, right? Based on what we know as ICT traders, people outside of the camp, right, that don't know ICT concepts, obviously there might be some like pushback and whatnot, but overall, this is what I'd be looking at if I was trading gold. If we drop down to the daily chart, wait, was that on the weekly? No, now we're on the weekly. So aside from that, so this here was, the, wait, why is it not working? Why does it not want to let me? Doesn't want to let me type. Okay. So yeah, that quarterly wick's respected. So I would classify this low to this high. Once it breaks through the 50% of this, I would treat this whole upper portion as a balanced price range. Technically, all of this is already balanced. It's just kind of coming back, offering more of a premium, letting them get back in, letting them reposition, make people still think that, oh, it's going to just go to the moon forever and ever and ever and ever and never stop. Okay. This right here is an intermediate term high. Got a high right here, lower high to the left, lower high to the right. Going into a fair value gap, we have a change in state of delivery. We have buy side, sell side. We offered buy side once more. You can see that this is actually filled. We have this wick. There's a volume imbalance in there, yes. But we have a large wick there, displacement lower, and we also have a wick in there. So it's pretty much offered delivery in there, so it's balanced. It doesn't have to come up there, especially after we change state of delivery here. Consecutive up candles, displacement. That open price is what they referred to, and you could see that's exactly what they referred to. We got this order block here. Price gets below it. It's trading up, respecting the 50%. And then now it's continuing. And this right here is the low of the wick on that quarterly perspective. This is also that upper portion of that rejection block I mapped out for you. Whoops. fix that. Quarterly. Whoops. See, this is the start of the, whoops. It's the start of the rejection block. So if this quarter closes like this, that's hella bright, huh? Whatever. So that rejection block is going to be very significant. I don't want to see this get taken out. So we could see we work from the quarterly perspective down to the time frames we're on right now. And you can already start to see the narrative starting to paint itself. And you can see that if this high to that low, if this creates a failure swing and we do respect this wick and we take this high out, we're just simply going to see if we can continue to catch buy-side delivery, because now we'll have a type 2 dealing range confirming price is really not interested in continuing to target deeper sell-side delivery. But for now, it looks clear. It looks like it wants to continue to drop. We have bearish seasonal influence. We have reasons to go lower, right? But one more thing that's kind of something that could throw a wrench into things. If the war breaks out in Iran, the other assets will fall potentially. This asset might be positively affected by that because then it creates scarcity. You know, the dollar will also expand higher because it's a flight to quality, right? And they like to be in safer assets. So we'll see. That could throw a wrench in this. If the war breaks out aggressively, it may or may not. We don't know yet. There's conversation of it. It may or may not. If it doesn't, this will probably continue to drop. I believe it'll drop, right? And we can continue to stay with this analysis. But if the war breaks out and we take this high out, you know, there's the wrench that's thrown in. But I'm going to be more so focused on trying to see if we can take this out, these relative equal lows. That's what caught my eye. But beyond that, if it breaks the 50% of this here, which is that larger monthly wick right there, you know, I wouldn't be very surprised if they look to try to come down and target some of this inefficiency like we talked about earlier. So longer term, larger perspective. So far, this is a breakdown, right? That's a change in state. That's a potential overall turnaround to try to come and seek some of the sell side a little bit. Long term, I'm bullish, right? Long term, I think that things are just going to maybe get worse. We'll see what happens. Hopefully not. Hopefully I'm wrong. But things are pretty chaotic. You know, we'll see how things, you know, how things unfold. But the world is pretty complex right now, and it's going to affect the markets. You know, it doesn't obviously mess us up, right? We're able to obviously navigate anything because we know what we're talking about. But that doesn't mean that you are reckless. That doesn't mean that you marry a trade idea. That doesn't mean that you don't be flexible. You know, you got to be flexible and you listen to what price tells you. And hopefully here in this community, listening to a lot of the things that I talk about, hopefully that's helping you guys, you know, clear the fog, open up your understanding a little bit more in a dynamic way. And it's getting you guys to start to be comfortable with what it is that you're doing. Okay. So yeah, that's pretty much my opinion. I would be looking to see if we can get this to target some of this. But more importantly, target that low and then these fair value gaps down here as well, because that's all inefficient. They need to offer sell side. It's the only way the market's going to fulfill its duty, which is to pair liquidity and clean inefficiency, right? Be efficient, essentially. That's all it does. And if it's hanging around consolidated, it's just loading up to be able to do one of those two things. Building sentiment on both sides, building liquidity. Okay? So that is my opinion on gold. Gold. Let's go see silver. Yeah, so silver, I would basically be thinking a very, very similar perspective. Okay, and unless this gets traded through this wick, so the next candle would have to close above this wick. If it does that, then we would look to go up, target this, and then use that as a balanced price range, use this as counterparty liquidity, and they're going to continue to go up. I'm not so sure they're going to want to do that, though. We got relative equal lows here. We got a bearish seasonal influence. But if the war breaks out again, that's positive for hard assets like this. So it won't really want to try to come in and seek some of this deeper sell side. For gold, for silver here, we also have this gap. So similar to gold, we do have an inefficiency that doesn't have any sell side. So they're going to have to offer that at some point. And what better time than at a time where seasonal influences are heavily hitting the market right now? But then again, you got to keep in mind the war. You know, that's something that's very unorthodox. Wars don't happen all the time. But when they do happen, you got to understand how it affects things. Similar to what I said about gold as well. We have this large wick. We couldn't even get to the 50% and we close rapidly below it. So what's been happening? It's been going short. Reaching for what? A discount array. What array? Fair value gap. Okay. And now we tag this fair value gap. Now it's coming back a little bit. We're stuck in between this wick and this wick. So it's going to have to give one of them up. And I honestly think it's going to be this one. So if we can get this to close down below 50% of this wick, we are 100% sure that we're going to end up targeting down here, or as close to 100% sure as we possibly can be. But we'll see. Again, if the wars continue, if we see a headline or something is announced where we're bombing and things are getting out of hand again, you'll see this respect and hold. Maybe it shoots a wick down there, tags it before it goes, but overall, long-term, gold and silver are bullish. Okay, like it's just the way it is, because the world is on fire in many ways. In some ways, it's stable. Some ways, it's on fire. So, it's definitely a pretty crazy moment. So we got to be very observant. We got to know what we're talking about. Got to know what we're looking at. We got to know when to stay out, when to engage. What to look for either opinion. And you got to allow yourself to be flexible, okay? But yeah, do you guys have any questions about anything? I would like to assume that this is going to try to target this, though. But depending on how it respects this, we'll have to just wait and see, right? But I definitely have my attention here. And we'll see what happens. So yeah, do you guys have any questions? Let me know. Let me know in the chat. Again, thank you for your time, you guys. I know sometimes these calls can be pretty long, but we talk about a lot of stuff. We're not here just twiddling our thumbs, talking about nonsense. It's all value. It's all stuff that's applicable. It's all stuff to make you a better trader, or my attempt to try to make you a better trader. And I think we do a pretty good job of it. So yeah, another thing, don't forget to like the video. I know I've said it a couple of times. It really does help the channel out, though. Subscribe if you haven't already. I think that what we do here is highly important. And I know you guys tell me all the time, too. So just wanted to remind you, don't forget. Thank you in advance. But yeah, let me know if you guys got any questions. If you guys don't got any questions, I think I've held you guys long enough. But I'm more than happy to answer questions for you guys right now if you have anything in particular. Doesn't matter what it is. Yeah, no worries, Slim. Thank you for the support, bro. You're here a lot. You could be anywhere else. All of you guys could be anywhere else, but you guys are here. So I got to do my part and make sure that your time is well spent. The last thing I'd want is for you guys to waste your time. We do enough of that early on in our career. And it's the last thing you need when you're listening to someone on YouTube is to waste more of your freaking time. So I hope you guys see that I do not do that, because all we provide here is value. It's very helpful stuff. So hopefully you guys get to go ahead and use it. Try to make it. Yeah, no worries. Even if you miss it, you don't really lose any
you don't lose any value, except the opportunity to ask like direct questions. But even then, you could just hit me up in DMs, and I'm more than happy to help you. But there's always a replay, thankfully. So yeah, if you guys don't have any questions, I guess I will let you guys get up out of here. If you guys do think of any questions along the way, as the week unfolds, just let me know. I'll be more than happy to help you. You guys can follow me on Instagram if you don't already at WMG Trading, X2 WMG Trading. No spaces, no special characters. I've had to report like 7 people this last week for trying to copy me. Obviously, we're doing something right. If people are making fake fucking accounts, trying to follow me, trying to victimize my followers. But hey, it comes with the territory when you're public, right? So I guess it is what it is. But yeah. So that being said, God bless you guys. Hopefully you have a good rest of your weekend. Let me know if you need anything. And yeah, let's make this week another spectacular week. So yeah, have a good rest of your weekend, you guys. Let me know if you need anything, and I'll catch you all in the